Hey everyone. So the Adapt Daily's been doing fantastic, and we just got finished closing a bunch of surf trades. And with that, we've had a bunch of new members show up and ask some questions about how to set up some surf trades with small accounts and just kind of how to tweak some things. So I'm going to go through a few tips and tricks and just kind of how to set these things up because the Adapt Daily can be bent to smaller accounts and much larger accounts. Let's get right into it. All right, so if you're new to the channel or this is your first time seeing this kind of setup, we started this account back in April, late April, with 25,000. We've made it up to about 36,000, but starting the strategy out with a smaller account takes some finesse because the way that I designed the Adapt Daily was for larger accounts. Okay. So you can see here that I closed out 3 surf trades today. They actually all did hit max gains. So I closed them out and I opened up a new surf trade. But first things first, we have to know, what trade we're having today. So, just to kind of reiterate for those of you guys that might not be familiar with the Adapt Daily system, on our website over here, this is our results page, but if you go into your account page, and let me just log in really quick. All right, we can go over here into the Adapt Daily, and we've got the Adapt Daily indicator and videos and all that jazz down here. So I'm just going to jump into the Adapt Daily indicator. And once we scroll down here, you can see that as of today is a surf trade. We can put these on anytime during the day. At least a couple hours after market open, and then everything, the data is kind of smoothed out at that point. So today is definitely a surf trade. It sometimes will change intraday, but just whenever your trade time is, just that's when I execute. I personally execute typically within the last hour, unless I've got a busy day or something. I might have to switch it just a little bit earlier. More on that another day though. But anyways, our profit and loss targets are 5% and 3%. For this surf trade, and then our allocation, I run this at risk level 3, which is 100% of capital in the account. And so you can see that this is a 20% capital. Now, why is it a 20% capital? Well, different trades will have different risks. So you'll see sometimes they're 11%, sometimes they're 15, things like that. That's part of the system. But then, of course, we can't get any larger than 20% because we sometimes have 5 trades on at a time, and you can't go over 100%, right? We're not using leverage or margin as far as that's concerned. We're using leverage and options, but no extra portfolio margin or anything like that. So now that we know that this is a surf trade, let's go jump into making one. All right, over here, we need to first start out with what comprises of a surf trade. Of course, you can see more of that once you are a member, but basically let's just get down into it. Is a 14-day calendar. So I can just show this one that we set up today, and then I can show a few different ways of setting it up. So first things first, we go down here and we do a 14-day calendar. Now we don't know the strikes yet because we haven't gone through that process yet. I mean, you can see where mine are, but let's just go into like we're doing this fresh. So we're going to want to go over to risk profile, and we're going to want to select the same date that is our expiration. So our expiration over here is June 14th. So let's jump over to risk analyzer, and we'll go to June 14th. Voila. Now, if you notice, the width between the put side and the call side are different, right? The call side is typically a little bit larger than the put side in Thinkorswim. That's not the case with all analytics software, but just to know that TOS is that way. So the way that we use the system is it is always the put distance for any of our systems, whether that be buoys or things like that. So anyways, we get down here into 1 standard deviation, and that is where we're going to place our calendar today. Now that is roughly 51. We'll just go right on the inside of it. We'll say 5160 just to be kind of nice. You can see that I executed this a little bit before the close, and then of course the stats after the close kind of change a little bit. All right. Okay, we're going to go to 5160. We're going to right click. We're going to go analyze by trade and go to calendar. All right, so now that has been thrown down here underneath, there are 2 ways to make a smaller surf trade. One is going all SPX, which is my preferred method at an account that's this size, right? We're at about 36,000, 25,000 when I started this too. It's the same thing. But if we're trying to get a little bit smaller than 25,000, maybe 10,000 or smaller, then we'd want to go this first method. So this first method is we're going to go into a portfolio beta weighted down here instead of single symbol. And then we're going to jump over to XSP. Now, XSP, if you don't know this, this is 1/10 the size of the SPX. And so we can run down here and we can make a vertical based on the XSP. Now, of course, it's still the same thing. We can go over here to risk profile, put in our date here, June 14th, right? And then we can go, okay, so 51.27 or 51.30 down to 519, right? So 530 to 519 is 11 points. So roughly speaking, we're going to be going over to, we're going to do a 5-point spread. So let's just put on a 5-point spread. So we'll just go buy here. So I just left click that, right? So it's going to be throwing it down here. So I left click buy here, and then we'll go 1, 2, 3, 4, 5. And then we'll go sell here. So I go over on the bid side of things, right? And we go sell. We go over on the bid side here, and then we hold control. Hold control, that's important just to make sure that these two trades link. And then we're going to hit a buy or a sell. All right, so now you can see that those two linked. And so now we have both of our little structures. Now what we can do is we can check mark this and check mark this, and then go over to our risk profile. And you can see our little trade setup now. Now, of course, this is 10 butterflies to 10 verticals down here. We are going to balance this out to where we can get a flat calendar and vertical combination. Now, there's two different components that create this delta, right? Number one is going to be the calendar, and number two is going to be the vertical. There's not a ratio like there is in the reef trade. More on that in another video. If you want to go check out the reef setups, I'll post that too. But the point is that we have to make sure that our calendar is at the proper dates. So our calendars are always 1 week wide. So we go from the 14th to the 21st. Voila. Okay, so now we've got a full-size calendar. We can break this guy down into being whatever size trade we want, right? And so lately I've been going near about 7,000 because that's about what 20% is of this account. But let's shrink this down even smaller because we can get smaller with this setup. So let's go down to like the smallest setup we can possibly get, which is at least using this method. So here's 4,000. We can probably shrink this down even further to basically like a 1 lot. I think this would be as small as we can possibly get. Yeah, so there's probably about as small as we can get for a single lot trade right here. We're looking at, so if we do right click and do a confirm and send, this is about 1,000 on this one. And right click, confirm and send, and this one is about 792. All right. So 1,000, so that's a $1,700 trade. Something to note that when the market starts to push up higher really aggressively and stuff like that, this bottom line here won't actually show your true Reg T margin. That's why I right click down here, did a confirm and send, and just looked at the actual cost of the trade to know what the actual size of the trade is, right? So this is roughly, like I said, 1,000 on one and 792 on the other, so about 1,800. And that's about as small as we can get for this method. And of course, that would be a rather small account, right? That's about a $10,000 account is what we can get down to with this method, with this trade setup. Now, let's say that we want to go let's say we want to go on all SPX. We don't want to use XSP because of the commissions or whatnot, even though it's not such a big deal, especially with this trade. but let's just say we want to stay in all SPX. Maybe we're trying it a little bit larger, but not quite at a one lot. So let's show what I'm talking about in that regard. So here, let's drop off of XSP, and we will jump over here, and we'll just go single symbol now, and we can jump back over to the SPX. All right, so now that we've got the SPX, and we'll probably put a few more calendars on here, and let's go make our trade. So we're gonna buy one here, and then we're gonna sell one here. So we created our vertical. Now our vertical is, of course, the ratio is all sorts of jacked up. It's all sorts of crazy. So typically how we'd balance this out is we'd make sure that we have the right amount of contracts of verticals to the SPX. But what if we're in this kind of weird situation here, like even right here, right? Where here is $3,000, and right now this guy is at $3,000 for the vertical as well, right? So this is a pretty sizable trade, but we need a little bit smaller than this, and so we're trying to fine tune how do we kind of balance these. So the best way to balance this, of course, is your ratio of calendars, right? The combination of these two is going to be what we're looking for. But what we can do to simulate less contracts on a vertical is make the vertical smaller. But there's two different ways you can make the vertical smaller. Per the adapt daily, there is the right way and there's the wrong way, right? So on this vertical, you can kind of see here, there are two different strikes, right? There's your long strike and your short strike. And down here, you can see that we have our long strike and our short strike down here. And what we want to do is we want to use the long strike, which is this one that's closer to ATM right here. We want to use that one to shrink the vertical. We want to leave the short strike where it's at. And this is important because it dramatically changes the gamma when we don't do this. So not to get too deep into it, because I didn't want to make this video super long or anything like that, but basically what will happen is you'll have this too aggressive of a roll off to the upside, and your P&L won't match the full size trade. So I'm showing you this that way we don't have that type of issue, because I dealt with that earlier. So let's just shrink this the proper way, and we'll take the 5280, and instead of being at 5280, we'll move it a little OTM. So we can move it up to 5290, and you can already see here that what it's done is it has started to push our delta a little bit more negative. It's starting to drop this side and it's starting to lift this side, right? So we can do that a little bit more. 95, and see, so now we're getting to our magic sweet spot. Right here, we're getting close to zero delta at the starting of this trade, looking really nice and fine gamma everywhere else, really gorgeous. One thing that I'm also going to reiterate in this video, in the surf trade, theta is irrelevant, right? We just took off 5 surf trades, I think 6 surf trades in a row of all profit, and almost all of them had negative theta, quote unquote, but made money every day due to the environmental shifts, right? And that was also during dropping volatility from yesterday to today. So it's not even always about volatility in the surf trades. If you're someone that's a little bit more advanced and you know that calendars hold a lot of positive vega, quote unquote, blah, 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 just trying to say here, that is not always the case. It's about the environmental metric. And we take care of all of those crazy calculations behind the scenes. So everyone can just execute this, have a good time, make some money, go focus on your other trades or life or whatever else you want to do. So boom, we have set up the surf trade in a smaller way. We shrink the vertical to kind of counterbalance this. You can see here now we have, if we do a confirm and send, you can see that we're at 3,100 on this one and 2,100. So now we're at like 5,100, almost 5,200. So the great thing about that is like I said, you can bend and tweak these two setups. There's two different ways that you can shrink a trade and make it to where it works your account size, if that's what you're doing. Smaller accounts, bigger accounts, little increments. Also, it's 20% of the account is what a single trade is. It doesn't have to be spot on, right? We don't have to get to the nearest dollar or something like that. We can kind of tweak it. Delta also get close to zero, right? We don't have to be super, spot on, perfect, things like that. There's a little bit of room for error and everything like that, just because these are such strong and robust edges. All right, guys. Hopefully you learned about setting up the surf trade in small accounts. I'll go over some of the other trades here in the future, and I'll post those videos as well pretty shortly. And always remember, adapt to the markets.